Trent Cotney and John Kenney are dedicated to helping the construction industry with legal business and safety challenges. Welcome to this week's episode of Law and Mortar.
Hey, this is Trent Cotney. I'd like to welcome everybody to another episode of Law and Mortar. As always, I've got the man, the myth, the legend, John Kenney with me. John, how are you doing?
Doing great. Glad to be here again. Always look forward to getting together.
Yeah, absolutely. So no shortage of topics to talk about. It's been a little while since we've done one. And, I've had the opportunity over the last few weeks to really, review a bunch of contracts that are out there. I've got, clients, customers sending stuff in, asking us to look at it, update it, make sure it's got the latest warnings and insurance, provisions in there. One of the things that's interesting, and I think a lot of contractors don't really think about it, is what do you do when you have extra materials that you have ordered for, a job that are on the job site? Who do those materials go to? Do they belong to the customer or do they belong to you? Now, John, back in, your estimating days, you always, have more materials because there's going to be waste, right? You're always going to order more. So one of the things I recommend is that contractually, you make sure that there's a provision in there that really identifies that it's yours. If there's anything left on, if you got a few bundles left over, they're coming back with you. They're not the owner's to use or resell or whatever. But it's important that you spell that out in the contract, because if you don't, you could get sideways with your customer. What are you seeing on that, John?
Well, actually, I think that's a great point that you brought up today. And this is an age-old problem. This has gone, I've run into this in the past, especially on commercial work, or, looking at it from a commercial side. I've been involved in projects where, say, the project engineer for a plant or a facility, because the contract wasn't clear, that's how I first learned about this. They didn't want the materials that were left over. They wanted a credit for the dollar value of the materials left over, which is in one way even a little bit worse because you're paying for them and then you're paying someone else to keep them. So that's a great point, and I cannot agree more. That should be stipulated that any overages, waste, however legally you recommend to word that, you got to have that in your contract, because I faced that a few times.
Yeah, great point. Absolutely spot on. So if our audience is listening to this, make sure that you're addressing that in your contract. Doesn't matter what type of construction you do, you want to have that in there, because if you don't, then you end up in that dispute at the end. So, John, you and I were talking before this program here, and one of the things that I think we both kind of noticed is that the price of money's gone up, meaning, with interest rates going up, it's become more difficult to get money. We're starting to see some capital impacts on, contractors being able to, maintain credit lines, get loans, string out their distributors, all that kind of stuff. But I know you have your finger on the pulse on the consulting side. What is it that you're hearing out there?
I'm hearing there's even the contractors that are doing well and have a decent backlog, cash is not where it should be. And then I'm here, there's a group that really cash is, we say, at the critical mass level for a couple reasons. One is, the free money's gone, right? You talk about the interest rates have gone up, and there's been a lot of companies that took out loans when it was cheap, but guess what? They weren't fixed interest, they were adjustable. And now instead of paying $2,000 a month to pay it back, it's now $3,000 a month, for example. And that's a big deal. And also, too, I'm finding there's telling me, and I'm working with some people on this exact issue, is that the receivables are doing what we like to call that famous creep out, right? They're getting further and further out, getting collected. And as you've preached it so well over the years, Trent, from a legal standpoint, the further out it gets, the less chance you're going to get of collecting it. So try to really tighten your cash up, because it's going to be a long ride before this, gets back to the other cycle again. It could be years. It could be a few years. Things have to change, but keep an eye on the cash flow for sure. That's one big one.
Yeah, great point. I think, there's some common sense recommendations that I would probably make to our listeners. One is, it's very easy if you're part of management to keep your eye off that, right? You delegate that to other people, you assume they're doing it well, but you got to watch it, right? And one of the things I recommend for contractors is come up with a threshold amount. That threshold amount, depends on your revenue size. If you're doing 20 million a year, it could be anything over 20,000, right? If you're doing 5 million a year, it could be anything over 1,000, whatever it is. Come up with that threshold amount, and then have your people, whoever's in charge of it, run a list every 2 weeks for you, right? And I think it really pays dividends if you focus on those higher dollar amounts, and you yourself put in that call, send that email, because that's it. You hit it. I'm starting to see a lot of creep as well, and I think it's going to impact contractors negatively. So I would much rather know at the front end if I'm not going to get paid at the end of a project rather than at the end of a project.
Absolutely. And
Yep.
looking at it from whether you're doing multiple projects for certain owners or contractors, make sure your sales department, your estimating, whoever's getting the contracts in, is aware of someone that may be ticking up in payments, and say, you know what, you're right. I got that number for you. I can get our labor force out there, but can you get me paid on this one here before we get moving on the next one? And you know what? They need you. So now, oh yeah, sorry about that. Let me go back to accounting. Whatever it takes to get that money flowing, you need to do it.
Yep, absolutely. I've heard every excuse in the book. I think it's important you just stay on them. One of the other things that, even though it's not directly related to cash flow, it definitely hurts that bottom line. And that's employee retention. Biggest threat to construction now is the same as it was 10 years ago. It's lack of skilled labor. And we're in sort of a zero-sum game where, you can't really recruit new labor. You might be lucky here or there. You might help get 10% of what you need, but at the end of the day, you're taking people from other existing contractors. That's pretty much how it is. So, one of the things that I think we're always doing, whether it's from a business or a legal standpoint, is trying to figure out what can you do to retain your good employees, right? And is it increasing benefits? Is it, giving a percentage of ownership? Is it, coming up with unique ways to train? I don't know if there is a guaranteed way to do it, but I know that the companies that are trying end up, succeeding to some extent. So John, what do you recommend as far as that to help, employers maintain and keep their existing employees?
Yeah. So one thing I want to talk about is an approach I don't think we think a lot about. And that is your growth in comparison to your labor force. So, we all agree when you stop growing, you can only be dying, but there's other ways of growing. If you're focused solely on sales, which I will tell you, majority of contractors are, if I did $1 million this year, I got to do $1.2 million, I got to do $1.4 million, $1.3 million, $5 million, whatever. Problem is, you're not going to find the subcontractor base or the labor force to keep up with that. It's not there, because as you just stated, which is so true, somebody's got to steal from somebody to make it happen, because there's not people jumping into the industry to do that. So really, if you look at how you're running your operations side of your company, and I started deep diving into this, and anybody wants to contact me on this for the numbers, I'm happy to do it. I will tell you right now, there is enough labor force. This is a world study to take care of half of the backlog of labor that we don't have if efficiency went up. Construction has dropped. Everybody else, production and manufacturing and all that, has gone up, not in construction. So if you look at your own operation and really set your jobs up correctly, cut down the waste, make it easier on your field employees or your subs that you have now, you will produce more in the same amount of time. And by doing that, you're going to add 20% more on to your business once you get it down right. And more importantly, it's profit, not just revenue. That's the important key. So you don't always have to grow. And then you try to work on the normal recruitment and hiring and retention. But one thing I will say on the retention is you've got to really be in tune with your employees. If they do not feel like they are engaged in your company, they absolutely will leave. There is a war out there for legal people in our industry to work. And if you're paying a foreman $40, non-union foreman $40 an hour, someone else will pay them 45 or 50 if they have the work. Trust me, it's going on now. So you really need to relook at what you're doing and to be successful.
Yeah, I think really it's you got to take a holistic approach to it, right? I think a lot of owners focus on one thing and put all their eggs in one basket, but I think it's it's a combination of a lot of things. You know, it's about making sure that you've got that culture. And you know, it's not all about, you know, profit and loss. You've got to be able to make sure that your group, your team, your employees feel like they're part of something bigger and maintain that loyalty. You know, it's not easy to do. If it were easy, we would be talking about it. But you know, always be thinking about it, you know, and try to do it in as many different ways as you can. John, we've talked about a lot of stuff, right? And what I want to do is I want to turn to your favorite time of Law and Mortar. That is the question time. So we have got a stack. It's not an inch thick, but it's probably a half inch thick. But I picked one out just because I know it's coming up. So this question is from Brian. Brian is a consultant, and he is interested in going to the FRSA Expo. And he wanted to know what we would be doing there, what we would be speaking on, and if he had any suggestions on that side of things. So as everybody knows, FRSA Expo is coming up here shortly, July 12th through the 14th. Always a good time, second largest expo, I think, in the US. So there's a lot of opportunity there. We will be speaking a lot, John. I don't know how many times we're speaking, but I think do you know how many times you're speaking?
Yeah, I'm speaking on Wednesday, and then I've got a recall on Friday. I've been asked to do the estimating the right way again. So I will tell if anyone's listening and you came last year, come this year, because I'm adding all new stuff. I'm taking it to the next level. One thing I do want to add is Friday is not set aside just for licensed contractors. There's a whole bunch of other programs besides mine on Friday. So they're really, that was successful last year. So they're opening it up where you know, anybody can come in on Friday and take any one of those classes that are open. So, and I know you've got quite a few speaking, and it's full conference. People need to take advantage of that.
Yeah, we've got you know, a lot of our team is going to be there. I'm speaking on you know, material defects, material issues. I'm going to talk a little bit about OSHA, got a seminar on that, but got something brand new, and that's legal issues and reputation management. Haven't really heard that talked about. I think it's going to be a good presentation. One of the do not miss ones is Trey Batcher and Steve McCommon in our office is going to be presenting on insurance issues in Florida. If that's all the questions I get now is what is going on with the storm and restoration market in the state of Florida. That's definite must see. I'm probably going to sit in on that myself just to pick up a few things, because both those guys are really knowledgeable in the area. But absolute great time. I encourage everybody, if you're out there, come say hi. Looking forward to seeing everybody there. So
Absolutely.
So we get to the end. I want to thank everybody for making us the #1 construction law podcast in the world. We will see you next week for another episode of Law and Mortar. If you'd like to reach out to me, you can contact me at trent.cotney@arlaw.com. John, how can they get you?
Jay Kenney at cotneyconsulting.com.
Great. We will see you guys soon.
See you soon.